Everybody, welcome back. And coming back with another video, an article released by M1 Finance for all of you people who are utilizing M1 Finance. I myself am utilizing M1 Finance for my recent 2020 portfolio. And M1 Finance recently is discussing a journal by a journalist by the name of Jason Zweig of the Wall Street Journal. It says he wrote a column about the intelligent investor. And he says here that in terms of recommending it, talking about the pros, have to sell now, but you don't. So basically, this article is talking about how, from M1's perspective, that what they're viewing as more investors who utilize M1 are actually depositing more money than those who are withdrawing in comparison to just a small window of Monday to Wednesday of the prior 4 weeks, which is actually a very small window. So if they're looking for the past month and they're saying, well, what does the past month show in terms of people withdrawing their funds? It's very important to understand. Obviously, M1 doesn't want you to be selling, right? Because especially, they recently hit their $1 billion mark of people who are invested in them. And of course, they earn money off of people who are invested in them. So of course, they're going to come out with some sort of article to showcase that this is the fact, that people are utilizing this opportunity to buy cheap stock. And so what this is basically touching upon this, that people are basically increasing their contributions. This is resulting in an overall net contribution increase of 34% over the recent time period versus the average. And I talked about this in my previous article, my previous video about how the market was going to pull back to the 27K mark, and that we were going to blow right through 27K. I didn't think that we were going to do it within one day, though, which is actually pretty astonishing, because it took us, if you look back, from about January of 2018 to right up to about November of 2019, just about 2 years. It took 2 years to break 27K in the Dow. And the market blew through that within one trading day. It gapped down, actually. You can see right here where the market actually gapped down. We kind of tried to rally back, and then the market just sold off, and then subsequently the next day gapped down. And I was actually quite surprised, but then in lieu of what is going on with the coronavirus, I'm actually kind of, how do I say, more, I know the market is going to come down. I thought we were going to test 24K maybe within the coming weeks. I think we would test 24K next week, as I know the markets are going to come down based off of the news that's been happening, where there are more and more cases. If you've been following, there are even more cases of the coronavirus. I follow it here on COVID-19 info.live, and you can see the confirmations, the deaths, etc., and of course news articles that's going on within the world. But just as importantly, you can see how South Korea is having a pretty good spike from last week. The market is going to react heavily, especially of what's going on within places like Iran and in Italy. And this is going to have dramatic effects on the market, because what's happening in a lot of these areas have migrant workers. If you had the opportunity to check out, there was an article here talking about the coronavirus outbreak and the plight of the migrant workers. Across all countries utilize migrant workers. As a result of these migrant workers, they, one, inject liquidity into the market, into the economy, but two, they also allow for people who maybe wouldn't be able to work, like either moms or dads who have children that need someone to watch their children, and they come and they watch these kids, and allows parents to go out and to earn a living. And of course, what we're seeing now is because migrants, and you're going to see kind of like racial profiling, prejudice. We're seeing it now. Even Trump tried making a claim that the coronavirus that's going to break out in America is kind of more relevant to like the Mexican migrants trying to cross the border. And you're seeing this in places, in one place after another, where they're like, oh, these people can't be in our country because they're going to spread the virus, right? That happened, and with the Philippines, it happened in Hong Kong, and in many other different areas. And of course, that is going to have an effect on every single economy, because these migrant workers obviously stimulate the economy by, one, going out earning a living, but two, then purchasing products in the open market, which of course helps to stimulate the economy. What you'll also see is you'll see a drawback of individuals who, for example, people who want to go to the movie theaters, sporting events, large venues, concerts, etc. People just going to the supermarket, shopping malls, etc. People are just, behavior is going to change, and that's also going to affect what we're seeing right now, where people are basically going to the supermarkets. They're literally buying everything off the shelves because they're anticipating that the coronavirus is going to be much worse than, of course, things like President Trump is talking about, where he made a statement that the U.S. response is most aggressive in modern history, as we hear about the death of the first U.S. patient that took place in Washington State. From a nursing standpoint, because I am a nurse, I've been in healthcare for the past 10 years. But prior to being in healthcare, I was a day trader. I was a proprietary trader for 8 years. And so I understand it from both perspectives, from the economic perspective and from the healthcare perspective. And I can say I don't see it. I don't see this aggressive preparation, not even in the hospital that I work. What I do see among my coworkers, among other nurses, among other healthcare practitioners, is a very lax mentality that I even get made fun of for being so interested and kind of absorbed in what is going on, because I'm very well aware of the state of healthcare, and especially in America. We're not China. America isn't going to sit here and start banning and quarantining tens of millions of people. It's just not going to happen. America doesn't have that kind of a grip on the people like China does with their people. Hong Kong has, in places like Japan and in Korea, you see more of a ethnic sticking together, unity, basically, right? So you see people working together. In America, that really isn't the spirit and the mentality of people during times of crisis. It's actually quite the opposite, which is kind of sad, which will be exacerbated during this economic, and of course during this what's going on, with the coronavirus. Because from a healthcare standpoint, I really don't see, no, they're not testing people, right? That's something that has been made known, that there's less than 500 people in the United States that have been tested. In Korea, for example, I think they've tested almost 80,000 people, with many of them either being quarantined as they're waiting for the results, or, as you can see here, that they were just over the weekend have shot up to 3,000 cases. And of course, as you test more people, you will reveal what is going on within your communities, and you'll find pockets of infection. In America, we're not doing that, which is why the numbers in the United States are so low. The other thing is that Trump and other politicians, etc., are kind of downplaying, as well as the World Health Organization, etc., are kind of downplaying what's going on. But going back into what I perceive what is going to happen within the market, I think next week we will more than likely test 24K. For those M1 Finance users who are injecting liquidity into the market, I would say it is a buyer beware opportunity. What looks like a juicy discount on a lot of companies may come back to haunt you, as, in my opinion, there are so many things that are going on between the coronavirus, between the the after effects, the economic after effects of what will happen with what's going on with the coronavirus within every single country. The economy is going to retract, not just within the United States, but all across the globe, as this is a problem that is affecting the global economy. The other thing that is going on within the United States is many investors in Wall Street are worried about who is going to win the election for the coming year, whether it's going to be Trump or Bernie Sanders. And of course, if Bernie wins, he is very much, at least from what he campaigns, very much anti-investor, anti-Wall Street, and in favor of giving a bailout to women who hold 66% of the $1.5 trillion that the United States is in debt in terms of education debt. Women hold the vast majority of educational debt and do not earn, even still to this day, as much as men earn. With that said, in my opinion, we're going to quickly end up testing 24K within the coming week. I would say, excuse me, I would say if you are investing, I would wait and hold off and see how the market reacts to 24K. And this is why. Looking at the 5-minute chart over the past couple of days, what you're seeing is a continued step down within the market. Every time the market tries to rally past the previous resistance area, the market's reaction is to sell off. And you can see it right here, right? The market, the high of here where you see the market kind of trades sideways, the following day the market tries to rally back to that point. The market's reaction is to sell off. You see it here where the market trades sideways, gaps down, the market tries to subsequently rally above where the market gapped down. The result is the market sells off. You see the exact same here. In my opinion, what happened here at the very end of the day was more than likely you had some buyers coming in, but you had a lot of short covering. A lot of the people who were going short over these past couple of days, because you had ample opportunity to go short here, where the market was displaying weakness originally when the Chinese market opened up, we saw the gap down below to testing the 28K. The market subsequently rallied, showing lots of weakness. More than likely what you see here is a lot of people getting short, where this looks kind of like a little bit of a head and shoulders play right here. You can see this right here, a little bit of head and shoulders on the daily chart, showing that it was weakness. And the moment the market broke 29K, it was a huge gap down of almost 1,000 points. And that, in my opinion, is going to continue up until we hit the 24K on the daily chart. Because you can see it right here, both 24K as well as, both 24K as well as 24K. If the market if this results in the market going into recession, along with what's going on with Bernie Sanders, whether, along what's going on, who's going to win the election, more than likely, I think you're going to see the market go down to 18K. The other thing to consider is that there are a lot of baby boomers who are retiring. At the hospital, there are numerous nurses who either have retired or are just a few months away from retiring. And most of them have their investments in 401k contributions or 403b, or basically into like Vanguard funds. And that basically, when they withdraw their money, they're basically selling the entire market down. And there's a large amount of baby boomers who are going to be retiring. What will happen, either those baby boomers will either accept the loss or be forced to come back to work, or extend having to work longer than anticipated so that they can earn back some of the lost money. Because this is a huge amount of money that was lost here just within this. It's about almost 12-14% loss in the market. There's a lot of liquidity that was injected into the market over this year. And so what you're going to see is either baby boomers are going to be retiring, which is going to push the market down further, or these individuals are going to be forced into going back into work, which is subsequently then going to remove jobs from the incoming generation, which means that that generation coming in who would normally take over these baby boomer jobs as they're leaving the workforce, and then a younger generation comes in and basically takes over their jobs. Now you're going to see that generation being delayed. This is especially seen within nursing, as every year it's like 500,000 nurses graduate nursing school, but there are only roughly around 200,000 jobs every year, while every semester, roughly about, I think it's roughly every semester, it's about 300,000 that graduate nursing school. This was at least a few years back when I actually did this research when I was in nursing school. So it's probably even more than that. I would say if you're looking to put money into the market, I would definitely wait, see how the market reacts to 24K, and see what's going on within the United States and across the globe, as we're going to be dealing with this as a nurse who is going to be at the front line of this. I can tell you from a nursing standpoint, from what I see, most hospitals are just not ready, especially with the mentality of the American people. You're quickly going to see, ERs and floors that are going to be overrun with people who are sick. I don't think people are going to be as obedient to the government in terms of quarantining themselves and trusting people to self-quarantine. I really don't think that we're going to see it, especially in places like, for example, California, that has a huge homeless population. And of course, right here in New York City, where we have access to public transportation via the subway. And of course, since coronavirus can live for multiple days on a surface, basically touching anything to hold on to in the subway puts you at risk, as well as literally being within close quarters to someone, where you can catch the virus via droplet, and some say via airborne, and of course via contact. Again, this is just my opinion. I wanted to put this video out because I know that there are a lot of people who might be anticipating purchasing and thinking, well, it's really not that big a deal if I purchase here, because over the long run the market is going to go back up. But you don't know whether that's going to happen within your lifetime, whether the market will continue to react this way of removing valuation, in terms of looking like there are a lot of stocks that are just ridiculously overvalued at this point, like for example Tesla and Microsoft, that are having huge pullbacks. I mean, you look at, just imagine all those people who were purchasing Tesla back up here when they were buying it at 800 plus, and then now the stock is sitting at 667, and it's only going to come further down. You're looking at stocks, for example, like Microsoft getting fairly hard hit, even though it had a fairly decent bounce. I think Microsoft is going to easily come down to the 140s. So I would wait. If you're looking to be an investor in this current market, at the very least to 24K. What I think could also happen within the market is that the market will bounce to 27K, which was the long-term resistance that should have been some sort of a support, which wasn't. The market literally blew through 27K like we didn't have a hard time going through 27K over the course of 2 years. And if the market does bounce, I would watch for the resistance at 24K in the Dow and the subsequent sell-off. With that said, if you have any questions, if you're interested, feel free to leave a comment. Of course, as if you're your first time here, be sure to tune in next time by subscribing so that you don't miss out on future content. Hope you guys have a great day. Stay safe. Take care. God bless.